about you?
Well, the thing I was struck by you saying he's already out. I mean, Jim Jordan, he had quite a few goes at it. I mean, I'm shocked. I'm shocked that he's not going to be the speaker. It seemed like it was going so well for him.
It's just, down here in Washington, David, we're a little less functional than maybe up there in New York.
By this officially?
I wouldn't jump to that conclusion. I wouldn't jump to that conclusion. We have our own problems.
Well, and you've been busy up there. Yesterday at the Economic Club of New York, you were talking to someone who doesn't focus as much on fiscal policy, like the eventual House Speaker will have to, but on monetary policy, Fed Chair Jerome Powell. And I know he talked about geopolitical uncertainty, but he's probably got to factor in domestic political uncertainty as well.
Well, exactly, Kayla. And actually, it's one of the things we talked about was the fiscal situation, because they have to at least take into account, even though they're not responsible for it, they have to take into account the borrowing that's going on, what that does, and you're seeing it. We're all seeing it in the, for example, the yields on the 30-year and what's happening. And he allowed us how there's term premium in there. And I asked him about how much he had to take into account. But one of the things I really wanted to talk to him about was, what did he learn from the last 3 years? There are those who think it didn't go that well in fighting inflation. He thinks now they've got their arms around it. But I wasn't trying to accuse anybody. I was just trying to say, what did he learn from it? And he sort of said, well, we could have done some things better, but it came out all right in the end. This is what he had to say.
Hindsight is always a wonderful thing, right? I think the fair way to judge the actions that were taken is to put yourself in the place of legislators and policy, other and central bankers around the world. And there was no playbook. We hadn't seen a global economic shutdown. People were thinking that the pandemic might kill a whole lot of people and that we wouldn't have a vaccine for 5 years. We might not have an economy for 5 years. So these things were all very possible in March of 2020. And so we pulled out all the stops and Congress pulled out all the stops. With the benefit of hindsight, could we have done a little bit less and had a little bit of inflation? I guess we could. But I think if you look overall at the performance of the U.S. economy, our economy is the strongest.
So there you have Fed Chair Jay Powell allowing us maybe they could have done something differently, but in the end, it didn't come out so far, didn't come out all that badly.
Can we acknowledge the fact that David Weston's interview has been around the world and back about 100 times? I mean, I've heard every TV network,
yes.
I've heard everyone, period, reference this interview, including the competition, David. You owned the airwaves over the course of this 24-hour cycle. And I know that it has a lot to do with the great David Weston, but it also speaks to the fact that this is still a market that is just on pins and needles when Jay Powell gets near a microphone.
Well, you're very kind, but let's be honest. It has nothing to do with David Weston. It has to do with Jay Powell, the fact that he came out right now, just before they go into the quiet period. And as you say, and you're totally right, the market is really almost an equipoise. It doesn't know where it's going right now. You look at that yield curve, it's almost pancake-like, right? And that leads to a lot of uncertainty. You see a lot of volatility in the bond market. And so everybody's looking for any kind of indication where we're going. I thought it was interesting, just from my personal point of view, in spending, I think we spent 40 minutes with him, trying to get a sense of where he's going. And basically, he's going to take it one small step at a time. He just kept saying, let's see how the data come in. Let's see what the next fact is. And so he doesn't want to commit to any sort of overall theory. At least he didn't yesterday.
Yeah, it was so interesting to hear you ask him about so many different factors, including, David, this bond market and whether or not it's actually doing some of his work for him. And he kind of suggested maybe it is at the margin.
Yeah, he didn't jump to that right away. You're right, Kelly, but he did get there. He said, look, tightening financial conditions does have an effect that we want to have. And so in that sense, at least on the margin, it relieves some of the pressure on the Fed to do more rate hikes. Now, he was not saying he's not going to do any more, but certainly it has to affect it. And he really relied a lot on those financial conditions and as they tighten, specifically why they're tightening. He said, as long as they're not tightening because they're anticipating what we're doing, they're really reacting to other phenomena in the economy, then that does a lot of the work for us.
While you're with us, David, I've got to ask you about the UAW, which is something we talk about a lot based on your history as a Michigan native, a member of the UAW. it's looking like we're going to hear from Sean Fain in the next couple of hours here. There's been reporting about a potential deal in the works here with GM. Do you expect news today, or are we just roll into another week?
Well, I think, Joe, we're going to have news even if we roll into another week. I mean, we could have news that's not a concluded deal. But if I'm reading this right now on the Bloomberg, and correct me if I'm wrong, we sort of have a bid and an ask, at least when it comes to GM and Stellantis, right? With a 25% pay increase asked and a 23%, it looks like, bid now by GM and Stellantis. So that's getting down pretty narrow. But let's bear in mind, it's not just the money. I mean, the money is very important. There are a lot of other issues about coverage of employees in the new battery plants, a lot of things like that.
Yes, right.
So they might get to agreement on the money without the other things, but it looks like there's a bid and ask at least.
We'll see what happens with the ask on pensions as well. David Weston, thanks as ever, the host of Bloomberg Wall Street Week, which starts 6 p.m. Wall Street time on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll have some final thoughts ahead on Sound On. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. One of the things we're keeping a very close eye on is the situation with regional banks. We did have Fed Chair Jay Powell yesterday telling our David Weston the Fed is working with regional banks because of the commercial real estate portfolios. Today, shares of Regions Financial are down more than 12%. We get more on what's happening there from Bloomberg's Ann Cates.
The Alabama-based bank is warning that it expects further declines in net interest income as higher interest rates continue to take a toll. Regions is reporting net interest income of $1.3 billion for the third quarter, worse than what analysts expected, and a more than 6% decline compared to the last quarter. The quarter's results include a one-time charge of $53 million tied to check fraud after reporting an $82 million operational loss linked to a different fraudulent check scheme. Ann Cates, Bloomberg Radio.
All right, thank you, Ann. Shares of American Express, they're down almost 5%. The company saw volumes on its cards slow, faster than expected in the third quarter. Small businesses and corporations both pulling back on spending on the firm's cards. And how about Ozempic for kids? It seems pharmaceutical companies are looking into it. Eli Lilly, for one, reportedly planning to test its diabetes drug Mounjaro on obese children 6 and up. Novo Nordisk, meantime, said to be testing an older and less powerful version of its blockbuster drugs Ozempic and Wegovy, also on kids as young as 6. So far, the Food and Drug Administration and European regulators have only greenlit that for use in adults or adolescents.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington with some final thoughts ahead. We just got ratings on the president's speech last night. We'll have to comb through it. First, world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. What do you have, Nancy?
Thanks, Joe. Well, Israel says Hamas has released an American woman and her daughter following talks with Qatar. The two have apparently been handed over to the International Red Cross. The Biden administration is asking Israel to hold off on any ground war so hostage negotiations can continue. Well, the White House has made its request for tens of billions of dollars in new aid to Ukraine, Israel, and more. Bloomberg's Nathan Hager has more from Washington.
The request is nearly $106 billion in all. More than half of it, $61.4 billion, would go toward arming Ukraine for another year. Another $14.3 billion is aimed at boosting Israel's defenses. The White House also wants $10 billion in humanitarian assistance, much of that earmarked for Palestinian civilians. To try to win over Republicans, the White House is asking for $13.6 billion to secure the U.S.-Mexico border and another $7.4 billion for other national security priorities. In Washington, I'm Nathan Hager, Bloomberg Radio.
Congressman Jim Jordan, following his loss on the floor today, as well as in a behind-closed-door secret ballot, says he's ready to support the next person selected as the House Speaker nominee.
It's important we do unite. Let's figure out who that individual is, get behind him, and get to work for the American people.
Republicans will hold another candidate forum Monday with a possible floor vote Tuesday. Another defendant in the Georgia election interference case is pleading guilty. Attorney Kenneth Chesbrough, accused in the fake electors plot, entered his plea today.
It is your decision to waive these rights and enter into this guilty plea because you are in fact guilty.
Yes.
How do you plead to count 15, conspiracy to commit filing false documents in indictment number 23 SC 188947?
Guilty.
Have you and your attorney signed that indictment?
Yes.
Chesbrough has also promised to testify truthfully at any related future trial. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe and Kaylee.
All right, Nancy, thanks. It was Joe Biden's only second Oval Office address to the
travel there during the war. I met with the Prime Minister and members of his cabinet. And most movingly, I met with Israelis who had personally lived through horrific horror of the attack by Hamas on the 7th of October.
There were a lot of questions, and I posed some of them earlier, Kaylee, about what impact that venue has now. That was a big deal, certainly in the old days when you'd have an address from the Oval, and it's something that this president has deliberately not overused. We just got ratings on this. What do we think?
So 20 million people across
20
all of the
million
major
people.
broadcast and cable networks. This is according to Nielsen.
That's a big number, right?
That is a pretty big number.
8 o'clock at night. This is prime time, of course, and a lot of people stumble on it because they think they're watching their shows when the president comes on.
Fair enough. But producer James writes in with some context here.
Okay.
Look at the Eagles-Jets game last Sunday.
Yeah.
26 million. And then look back in January 2019 when former President Trump gave an Oval Office address on border security. That got 40 million views.
Oh, wow.
So that's double.
All right, there's got to be a Truth Social on that already. Very small crowd size. Very small
If it's not
ratings.
out there, we better watch for it.
No ratings power. We just got a big old headline on the terminal in his courtesy punch bowl because we can't get enough for the speaker's race. We have another?
Evidently, Tom Emmer, who of course is also a longtime member of House Republican leadership.
Yep.
He's been the whip.
He
He is the vote counter. He reportedly is seeking the nomination for Speaker, in addition to a handful of others who have already tossed their hat in the ring literally an hour after Jim Jordan got booted.
Of Tom Emmer, right? That this
would be a big fish.
This would be the big fish indeed, who the Washington Post just 2 weeks ago said would be likely the next Speaker of the House. Now it's Tom Emmer's turn, everybody. Who else wants to jump in? James? Justin? Come on.
Joe, Matthew?
Raise your hand. I've already said I will not stand for Speaker. Kaylee Lines, you keep going up there. You might not be able to get away. Hey, Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Very good afternoon, everyone. It is Friday, October 20th, 2023. Carol Masser along with Tim Stenivek live in our Bloomberg Interactive Broker studio on YouTube and, of course, on Bloomberg Originals. It has been quite a week.
Yeah, it certainly has. We're on track, at least with the equity market, for stocks to be a wild week and down 2% on the S&P 500, down almost 3% just in the last 5 days on the NASDAQ composite, Carol. Also a wild week when it comes to U.S. yields. We're going to be focusing a lot on that today.
You know, I was working at home with my husband, and it's like, you know, typically I think you can, as an individual, you can really just focus on one big news story, and we probably have about 4, 5, or 6 of them out there.
I did not think that's what you were going to say. I thought you were going to say you were talking to him about yields, and I was like, in the Masser household, come home from work and talk about yields. I don't think I've ever talked about yields with my wife.
Seriously?
I mean,
of course
I guess,
you have.
I guess in the context of like mortgages.
A 20-year-old
with
the money market, like it's like happening.
I love it. We are in a new era.
Oh my God. Speaking of new eras, fluid and frantic situations, that is our world on this Friday, October 20th. We're going to get to the latest on the Israel-Hamas conflict, some new developments certainly on that front, or several fronts, and the battle for a Speaker of the U.S. House. Jim Jordan, 3 strikes, you're out.
Yeah, I wonder what's going to happen after this weekend. That's the big question.
Yeah.
Also, we're going to get some checks on the economy thanks to Tom McGee. He's president of ICSC. It's the trade association of the shopping center industry. What is he hearing from his members about what they're seeing in real time, and does it actually kind of gel with this week's strong retail sales data?
I really love this. So we'll see what he is seeing, boots on the ground, if you will, when it comes to the retail sector. Also, you know, maybe another economic indicator when we're in these kind of odd positions, if you will, just like a hedge fund investor, right? You're looking for different metrics. So luxury sales, what are we seeing on luxury when it comes to buying trends? Chuck Cashman is Chief Revenue Officer and Executive VP at the boat and yacht retailer MarineMax. He's been on before. They've got a big boat show coming up in Fort Lauderdale, so we'll see what he has to say. Are you buying a yacht, Tim Stenivek?
I'm going to ask the cash man all about it.
The cash man. Is that like your banker, your personal banker? Can I buy
a
yacht?
Chuck Cashman, he sells yachts. Like, I love it.
I love it too.
Doesn't get much better than that.
Interesting story about the founder of Lululemon, Chip Wilson. It's in the new issue of Bloomberg Business Week, his own personal struggle and how he's spending big time to cure it. And then it's been a week, so we're going to check in with Matt Revelette. Back with us, winemaker for Sidori Wines. Pinot Noir, that's their thing. Noir. Did I say it funny?
Are they going to bring some wine to?
Apparently, I'm not drinking yet. I'm just going to say, don't go anywhere. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and our partnership for those folks streaming on YouTube. An interesting day here in the market, Carol Masser.
Yeah.
We got a lot of earnings this week here, including earlier this morning out of American Express, which I think would give somewhat of a read about consumer spending and a little bit of a mixed bag as to what we learned.
Yeah, absolutely. It gives you a little bit of a reading, certainly into what customers are doing. Certainly, one would say on the higher end, right? But I also love what it says about business customers, small business and others. And what we are seeing is that growth in spending by that group of customers, business customers, they're slowing down. And I always think that's a great indicator, potentially, of maybe what's to come.
How about Gen Z, though?
Gen Z's doing well.
They're doing okay.
They're spending money. The company's CEO, Steve Squeri, said that spending was strongest in the U.S. customer segment. Millennial and Gen Z consumers continue to be the fastest growing portion of our card member base. I don't know if they're shelling out $695 a year for that platinum card quite yet, but maybe in a few years. And Amex did really well when it came to actually getting consumers to pay up more
I would
for
just
these
like to point
cards.
out, Tim, that Katie and I had this conversation a little bit earlier.
Yeah.
And at one point,
It went
she
well.
mistook
It went
me.
really well.
She mistook me for a baby boomer.
I don't think I did that. I was just saying.
No.
Carol, don't you?
Has she ever heard of Gen X? I'm just wondering.
No, she forgot about Gen X. She was like, there's baby boomers and there's millennials.
Gen X is the most, I will say this, Gen X is the most underrated generation.
Thank you, Tim.
Yeah.
And I'm not just saying that because, we're talking to Romaine here right now.
Kind of sounds like it, but.
Katie, we'll go watch some Reality Bites, a classic Gen X movie.
Okay.
You can learn a little bit about the 90s.
Okay, yeah. I mean, I was born then, but I wasn't really conscious for a lot of it.
Remove her from the set.
Well, don't make me leave yet because I want to talk to you about this other story. I'm dying to talk about it. It's titled Ozempic for Kids, ? Firms test weight loss shots for 6-year-olds. This is really fascinating.
6-year-olds.
Eli Lilly and Company, it's planning to test diabetes drugs for patients 6 and up. You also have Novo Nordisk testing a older and less powerful version of drugs such as Ozempic and Wegovy. A lot of this depends on people familiar with this situation. But I mean, we talk about these drugs all the time, and it feels like we're really testing the limits here.
6-year-olds.
Yeah.
Okay.
Yeah.
I mean, can you think about, I don't know if you guys remember Carol, giving a shot to a 6-year-old, like a flu shot or something. This has to be once monthly.
Do parents do that themselves?
No, parents don't do it, but they have to take their kids and deal with the aftermath of it.
Oh,
They would probably figure out a different formulation.
I mean, they are working on pills.
Yeah.
But without trivializing this, I mean, obesity is a huge issue in the U.S. with kids. And I just, it would be nice in the U.S. if we address the situation too in sort of a different way rather than through this, like maybe addressing it through nutrition, addressing it through lifestyle changes and those sorts of things.
Yeah, I mean, I know that these drugs serve a real purpose for a certain segment of the population, so I don't want to minimize that. But we also know that there is a huge sort of, elective sort of side to this. And when you start bringing in underage children, it kind of raises the question: are there other alternatives to just putting them on drugs at the start of their life that they're going to have to be on until the end?
Well, exactly. I think you feel like you can have an internal debate with yourself, like how long will these individuals have to be on these drugs if it is forever, and what are the repercussions? At the same time, obesity creates a whole other swath of health problems, and that can be a big problem as well. All right, we got to run. All right, guys, we'll be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We're going to count you down, wrap up the Friday trade and the week overall. We'll see you at 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we're going to stay with the markets here on Bloomberg Business Week on this Friday. Rightfully so. Quite a week, quite a couple of weeks, quite a day. Well, I would say it almost feels like things are a little bit calmer. No, it feels a little bit calmer, but, it does feel like the trends are just kind of, beating us up, to say the least. The stock market has definitely been whipped around in recent weeks by rising geopolitical concerns, those climbing treasury yields, and growing worries about interest rates staying elevated for longer. You keep having Fed commentary following on the heels of Jay Powell yesterday.
Is it a blackout period yet? No, it's not.
We're pretty close, though.
We're getting close.
All right, let's get to it. Bloomberg News rates reporter Michael McKenzie, he's back with us on Zoom. And then, of course, with the equity side of things, Bloomberg News senior editor for Bloomberg Bloomberg Markets, Mike Regan. He's here in our Interactive Brokers studio. Hey, Michael, I want to start with you because I do feel like it's been your game, your week, your couple of weeks when it comes to our focus on the Treasury markets. How are you thinking about it here on this Friday after 5 days of trading?
Well, I think the market was due for a bit of a breather here, and we sort of saw, I think, the fact that equities are off so much and testing their 200-day moving average for the S&P, that's kind of allowed the bond market to find some feet going into another weekend where there could be some risk events that warrant owning treasuries. But I do think the longer-term trends remain intact here for now. And that's how higher long-end yields.
Hey, Michael Regan, we got two Mikes with us today, so I'll use your last names. Mike Regan, even though we're down 2% on the S&P 500 over the last 5 days, I still get this sense that equities haven't quite caught up with the moves that we've seen in rates of late.
Yeah, I mean, certainly not on the year. You look at the S&P's still up 13% on the, or 10% on the year at the moment. NASDAQ's up 25%. But the longer these rates stay high, the longer oil prices stay high, the longer the dollar stays strong. We're getting a little bit of relief from all those cross-asset signals today. But the longer they stay high, and to Mike's point, keep going higher, I don't think anyone views today as any real inflection point in the bond market. Relief rally or whatever it is, I don't think it's building much confidence that the peak in yields has necessarily been set. But the other really interesting thing today is some of the earnings reports that came out. Region Financial, really a small bank, but really dragging that entire regional banking sector down. I mean, those problems haven't gone away for these banks. The problems with
right.
a lot of exposure to the long duration bonds. A good reminder of that today. I mean, Regions is trading near below its low in March when all that turmoil was. At least it's closing low, and at the lowest since 2020. So, those issues that we kind of rallied through earlier in the year haven't gone anywhere, and some of the sort of thematic excitement trades are really kind of just dying out. Like, look at Nvidia's down about 16% from its peak in August.
Right.
Very quietly behind the scenes, but that whole AI play is kind of just fizzling out.
Well, that goes to Michael McKenzie, right? Like we talk about, this higher for longer. Man, I've said it a million times. I feel like this year, last year, no, maybe basically this year, certainly in the last half of the year. But it does speak to this kind of reset on valuations or what people, I look at the bond market, right? You have to think about both price and yield and like the balance between that. And I do wonder whether there's, some battle or debate among Treasury investors when it comes to that specifically.
Yes, Carol. I mean, I think the real debate in the market here is the market senses that if yields stay high for longer, it's going to finally start to break something. And a lot of people mentioning the regional banks today, people also noting that credit spreads are starting to move out. So that's going to help treasuries at the margin. But I think what you're really dealing with is think back to all the people who thought when the regional banks fell apart, and actually Silicon Valley Bank blew up back in March, the 10-year treasury got as low as 325 by early April. And we know when we look at positioning data, a lot of people piled into the treasury market then. That 10-year got within very close to 5% this week. That's a huge move in the yield, which has really punished the price. So what you have here is a bond market that's saying, yes, higher for longer, testing 5%, real yields at 2.5%. That's probably going to break something. But the problem is, it's probably not going to break something fast enough for this bond market. You've got a bond market where people are sitting on big losses, and we're getting towards the end of the year, where traditionally people start trimming back and putting the money into cash. And this year, for the first time in a long time, cash is giving you 5% plus. So you really have an incentive to just stay home and move to the sidelines and put your money in cash. And I think that what's going to be very interesting over the next couple of weeks is we have the November refunding coming up, the Fed meeting in November, 1st of November on the same day, and what's the market going to make of this? And I think that's where you probably get a lot more volatility and some final kind of blow off top in the yields where you get capitulation, and then we'll see where the dust settles.
Michael McKenzie, forgive me because I believe I already asked you this question earlier this week, but I want to know if your view on this has changed. You mentioned something will break. We just heard Mike Regan talking about Regions Financial and alluding to what happened in March with the regional banks. We saw some of the regional banks break earlier this year. What do you think could be the next thing to break?
I think when I was talking to my colleague John Alders about this, and we were sort of talking about how in the first decade of this century, investment banks made all the running, and so did hedge funds. And then we had the financial crisis, and they all got their clocks cleaned. The sort of era of zero money, QE, unlimited, no inflation, that's been the private equity era. And if you look at private equity firms, they've now become the biggest players in corporate credit over the last decade and a bit. So we are starting to hear signs, talk of strains, people trying to get their money out because obviously investors tie up the money for long periods of time with private equity. But I do think that's the area to watch. These private markets where a lot of money's come in, it's tied up for a long period of time. And I suspect when the economy starts to weaken, private equity, you're going to hear more pain coming from people in private equity firms.
Well, I think about Blackstone, right, that recently reported, and they're kind of dealing with, Mike Regan, the higher rates. And I mean, there's also a pullback in deal making that obviously impacts them, but they're trying to, operate within a very different rate and higher rate environment.
Yeah, right. You even saw that fund linked to PIMCO defaulting on a real estate project. And, to the point of, well, are things breaking or not? I think, it goes back to Powell's comments yesterday. I think today might still be a little bit of a hangover from what we heard from Powell yesterday because he just doesn't sound phased yet, and he's talking about how the economy still seems strong to him. Banks seem strong. He doesn't see commercial real estate as a big threat to anything yet. He's talking about how the path down in inflation is going to take time and be bumpy. So,
but isn't it kind of fair? I mean, you look at retail sales, industrial, production data. We know the housing market has definitely slowed down, but he's kind of looking at the facts that are in front of him.
Yeah, I mean, it's a glass half full, half empty world. He's taken the half full side of it, and again, does what have we seen, a 7% dip in the S&P from its high? Does that bother him when the market's still up in double digits for the year? And really, there's no sign yet of, any sort of collateral damage from this little mini correction in equities that we've seen, or almost a real correction. So, he's confident in it all, but, the market's getting a little nervous.
Meantime, we did a Bloomberg Monthly survey, and economists Michael McKenzie have boosted their U.S. growth projections and reduced their recession odds. That recession that everybody says keeps coming just doesn't.
Yeah, and I think that's what's also driving the rise in yields, and in particular real yields, which is your true cost of capital. Those real yields are now at the highest level since 2008. We had a sale of 5-year inflation-linked bonds yesterday. You didn't see reasonably good demand for that, even though that came at the highest yields since 2008. And it just tells you that you've got a buyer base in the treasury market that's been burned pretty hard for the third year running. And they're getting more and more reticent, and they've got they've got two forces here. They've got a lot more supply coming because the budget deficit's at 8% of GDP. The Fed's doing QT, so they're no longer a buyer. Foreign investors have pulled back markedly in the last couple of years. It leaves domestic investors as the buyer of treasuries at a time when, as you say, their recession call, which they were really, really confident about back in April, hasn't come to fruition. A lot of people on the street keep kicking that out to the first half of next year. It wasn't that long ago when we were saying, it's going to be the end of this year.
Right.
So as that keeps getting kicked out, and because the economy is so resilient here, particularly when you look at the jobless claims this week, which will be the survey week for the upcoming payroll report in early November, that's why there's so much pressure here in the bond market, and it's got to come somewhere. The Fed's going to go on hold. The front end stays in where it is, around 5%, but that back end, those yields are actually below the 2 years. So you're going to see the curve continue to normalize, and we'll be out of a curve inversion, and it could be faster than people think.
It's been a week. It's been a day. It's been several days. To the Michaels, thank you so much. Bloomberg News rates reporter Michael McKenzie on Zoom for us. And, of course, right here in our Bloomberg Interactive Broker studio, breaking down the equity trade, Bloomberg News senior editor for Bloomberg Markets, our own Mike Regan. Hey, folks, we're just getting started on this Friday. TGIF, Carol Massar, Tim Stanovic. This is Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And we check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini. Stocks are lower. Chris Grisanti, chief equity strategist over at MAI Capital Management, says these rising treasury yields we are seeing just make it a great time to be very cautious about stocks right now.
The dirty little secret is that when long rates peak, the equity market usually peaks shortly thereafter, and I share that opinion. Now, I'm not expecting Armageddon, but there are seasons, and this is a season of reaping, not sowing.
And Grisanti there on our Bloomberg Surveillance podcast. And we'll check the markets for you. The Dow right now down about 224 points. That's down about 0.7%. The S&P 500 down 1%, down about 42 points. The NASDAQ down 1.3%, now down 168 points. Yield on the 10-year right now, 4.92%. Shares of American Express, they've been lower all day. Amex reporting third quarter revenue and profit that soared. Shares are down. Why? Because volumes on its card slowed faster than expected in the third quarter. Small businesses and corporations both pulling back on spending on the firm's cards. Spot gold, it's been higher all day. NYMEX crude, it is lower as investors kind of shake off Mideast jitters. We've got Hamas saying 2 citizens held in Hamas have been released. Also, leaders from around the region are heading to Cairo. This is for a summit tomorrow on the crisis. China and Germany guys also sending envoys to the meeting. And that is your Bloomberg Business Flash.
All right, Denise, thank you so much. We are going to do a little bit of a DC roundup right now, and this on a headline. Hamas has released 2 U.S. citizens who had been held captive in Gaza. This coming from the Israeli government as U.S. and European officials are pressing Israel to delay a ground invasion of the territory and allow time for talks aimed at freeing hostages.
So finally, a little bit of good news, but it's just a little bit.
Exactly. And this was certainly something that President Biden addressed last night, speaking for roughly 15 minutes, an address to the nation from the Oval Office, I believe his second since he became president of the United States. So really talking about that, but really spending a lot of time and really an appeal to the American public of the need for aid to go after the threats to American democracy, everything from Hamas to Russia to China in regards to Taiwan.
And the U.S.-Mexico border as well, in hopes that a comprehensive package could help speed passage through a very fractured climate on Capitol Hill. I think that's certainly an understatement. With more on the president's approach and mission and how it reminds us of the multiple geopolitical threats that are out there, we've got Bloomberg News U.S. National Security Team Leader Nick Wadhams with us on Zoom from Washington, D.C. Nick, I want to start with the news that we just got. An American mother and her daughter freed from Hamas in captivity. We're just hearing now from the U.S. that Hamas militants freed an American woman and her daughter almost 2 weeks since they were taken captive during the group's deadly raid on southern Israel. That's according to the Israeli government. Just give us your view from Washington, D.C. on this.
President Biden has just come out with a confirmation, though he didn't identify the two. He said that the 2 Americans had been released, and the U.S. would work tirelessly to secure the release of several other Americans who are unaccounted for. I mean, so I think what you're seeing here is these furious behind-the-scenes negotiations. There are about 200 people, mostly Israelis, obviously, who are known to be held captive by Hamas. At the same time, Israel is threatening a massive ground invasion into the Gaza Strip, and up to this point had sort of suggested that, the hostages were not going to be their top priority as they press ahead with this invasion. But we've since learned that U.S. and European officials had been pressing the Israelis to slow the timing of that invasion so they could work for the release of these hostages. So that's where we are right now.
Meantime, you've got Israel also responding to fire from Lebanon by hitting Hezbollah assets. There were evacuated residents near that border. I mean, it does feel like, Nick, slowly it's expanding potentially, but I am curious what you are hearing from in and around the White House about whether or not things feel like they are moving more towards containment, might I say, or that they are still worried about this expanding beyond Israel and Hamas?
Right. I think that fear of the war expanding is still very much there. You had the U.S. acknowledging yesterday that there had been drone attacks on U.S. forces in Syria and Iraq, though only minor injuries from those two. But, you know, the real question is going to be what happens when the Israeli ground invasion begins, because that's the concern that once that happens, you might see a much more intense response from Hezbollah, potentially even Iran. So I think everybody's holding their breath till that that attack happens.
Nick, help us understand what a ground invasion in Gaza looks like. I mean, we're talking about a really densely populated part of the world that is surrounded by walls. The border crossings are closed still currently, full of tunnels as well. What does a ground invasion look like here?
I think very slow, very bloody, very painful. I mean, this is it's going to be urban warfare at its most nightmarish. And that is one of the reasons why there's so much concern about this, because Israel has said, listen, they want to go in with devastating force to make sure that these sort of attacks never happen again. You have tanks and troops massing near the border. But at the same time, as you mentioned, you know, the expectation is that there are a lot of tunnels there. There are booby traps. There are going to be IEDs. It's going to be very bloody. And, you know, any civilian who has remained and not heeded the evacuation order, I mean, some people were stuck in their homes or say they can't flee. They're going to be caught in the crossfire. So it has the potential to be really, really bad.
Nick, I was kind of struck by the president's comments last night, looking for emergency funds to arm Israel and Ukraine, reinforce the U.S.-Mexico border. There was also concerns about China and Taiwan. It's a reminder of the multiple geopolitical hotspots, threats, however you want to describe them, that are out there. But in doing that, you know, the president really striking out about or reinforcing the importance of American democracy and protecting it. But I am curious how his comments are resonating through kind of the national security infrastructure right now.
Well, the thing it really brings home is that we are now entering into this world where the U.S. Is providing a lot of security assistance to three partners in various places around the world. I mean, that supplemental request is going to seek more than $60 billion for Ukraine, $14 billion for Israel, also for Taiwan. I mean, these are three places where the U.S. has said standing up, you know, in support of these allies and partners is crucial, you know, to obviously, you know, to project American power and also to preserve democracy. So, you know, there is a question of, okay, can you do all three of these things at the same time, especially when there are concerns about munitions, you know, running low in Ukraine and the ability to produce artillery shells and other material that they need. There's not a lot of overlap between that and Israel, but can the U.S. sustain these three all at the same time? Taiwan's slightly less of an issue because obviously they're not under attack the way that Ukraine is in the pending ground invasion, but it's certainly a concern that the U.S. is going to get overstretched.
Is it more easier to swallow, if you will, for members of Congress if we have multiple aid package? You can see the politics at play in certainly the request.
Right. I mean, I think, you know, there's obviously a strategic element there in combining the Israel and the Ukraine aid, obviously recognizing the fact that not much is going to happen until the House has a speaker. But, you know, there had been this growing resistance from Republicans in the House about funding Ukraine. So if you twin that with Taiwan and Israel, both of which have very strong bipartisan support, along with, it should be mentioned, funding for the southern border, then that's seen as more palatable. But it is quite fascinating that, you know, the bulk of that supplemental, more than $60 billion, would be going to Ukraine. And obviously, you know, we're a long way off from being able to know whether Congress is going to support that because they don't have a speaker. The House can't take any action, and that Republican resistance does remain.
Nick, when you describe the way that the U.S. is in different parts of the world with security assistance, it really varies depending on what region you're talking about. And I think of what's going on in Israel right now and the fact that, you know, U.S. ships are actually actively shooting down missiles that are shot at Israel right now. Talk to me a little bit about the role that the U.S. is taking and the implications there.
Well, the big message that the U.S. wants to send there is, okay, we're going to send all these military assets to the region, and that's going to deter Iran, particularly from getting involved, maybe Hezbollah. So they really want to show, demonstrate force and say, okay, this is the punishment that is going to await you if you try to get involved. But the risk, of course, is that by being there and by getting into the middle of these things, obviously as the drone attacks on the U.S. bases in Syria and Iraq highlight, that the U.S., rather than deterring, will be pulled into the conflict itself. And, you saw yesterday, as you mentioned, Tim, that the U.S. shooting down these 3 cruise missiles from Houthi rebels. The language from the Pentagon was very much that the U.S. wanted to demonstrate its presence, and the target of those cruise missiles was not clear, but you had this USS, an American destroyer, in the Red Sea. They felt they were under threat. They were not the target, but they felt there was a potential threat, so they shot them down. But you see a situation like that where the U.S. is in the region, and then maybe, according to some folks, is inserting itself into the conflict, and that could pose its own risks down the road.
So complicated. All right, Nick Wadhams, thank you so much. Bloomberg News U.S. National Security Team Leader Nick Wadhams joining us on Zoom from our D.C. Bureau. Just want to mention some headlines crossing the Bloomberg just about 10 minutes ago. Senate Minority Leader Mitch McConnell saying that they must produce a bill that meets national security needs and that the Senate must work to help Israel and equip Ukraine. So weighing in on what we heard from President Biden last night.
All right, those headlines continue to come across the Bloomberg terminal. We'll bring them to you when they do come as well. Let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. President Biden says the U.S. has secured the release of 2 American hostages, a mother and her daughter from Chicago. Hamas has handed them over to the International Red Cross, and the U.S. and European governments are pressing now for Israel to hold off on any ground invasion in Gaza so they can continue talks on freeing additional hostages, including Americans. The United Nations is working to see a key border crossing between Egypt and Gaza open up so that humanitarian aid can make it to the Palestinians who've been cut off from food and water. President Biden just provided an update on what he's heard.
I got a commitment from the Israelis and the President of Egypt that the crossing would be open. The highway had to be repaved because it was very bad shape. And I believe that within the next 24 to 48 hours, the first 20 trucks will come across the day.
Biden says he secured a promise from Israel during his visit earlier this week that humanitarian aid would flow across the border into Gaza. Kenneth Chesborough, an attorney accused of playing a critical behind-the-scenes role in Donald Trump's efforts to overturn the 2020 election, has pleaded guilty in Fulton County, Georgia.
Is your guilty plea freely and voluntary given with full knowledge of the charges against you?
Yes.
Do you understand that you only have a limited right to appeal this guilty plea?
Yes.
Chesborough's last-minute plea deal includes 1 count of conspiracy to file false documents. He was allegedly the architect of the fake electors plot. The other charges, including a racketeering offense, have been dismissed. Former President Trump is being scolded and fined by a New York judge for what he calls a blatant violation of a partial gag order in his $250 million civil fraud trial. Judge Arthur Engoron has fined Trump $5,000 for failing to take down a social media post in which Trump criticized the judge's law clerk. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:40 on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini, and for more, we're going to head over now to the First Word Breaking News Desk for today's afternoon call. And for that, here is Bill Maloney.
And good afternoon, Denise. U.S. stocks under pressure from the start, with the Dow currently down 225 points. S&Ps are down 45. Note it has been testing its 200-day moving average all day, and NASDAQ is off by 1.3%. The U.S. 10-year yield at 4.92%. Gold is up 6, oil trading lower, but Bitcoin is higher by 2.5%. Among the main 11 S&P sectors, all were trading in the red, led by losses in energy and tech. And leaders to the upside in the Dow, Walgreens and Merck, while Salesforce and Intel led to the downside. After earnings, American Express dropped 4.8%. SolarEdge plunged as much as 37%. And in other news, Okta plunged 14% intraday amid a report hackers stole Access tokens. Also noting here, Beyond Meat hit an all-time low. Wrapping things up, Regions Financial plunged as much as 16% and tested the key March lows. Live from the First Breaking News Desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg, type SQUA, that's for Squawk, on your Bloomberg terminal. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about 18 minutes, just under 18 minutes to be exact, left in today's trading session. Quite a week. We're pretty much, though, near or low, certainly on the Dow, but pretty much so on the S&P 500. Of course, Denise just breaking down the numbers. So down on the week overall as well. And, it's been a week where, once again, you see yields moving up substantially. Right now, that 10-year, though, it is below 5%, 4.92222 to be exact.
I'm actually taking a look at the S&P 500 right now, Carol. We've moved a leg lower, as you mentioned. We're at the lowest right now since June of 2023.
June of 2023.
So we've gone back to,
right.
It's been of summer. Been there.
Yeah. Or maybe you're doing it over bourbon.
Yeah, the bourbon helps with the 5% yields and all the Fed watching, that's for sure. But we do. It's what our clients are worried about. It's what our clients are invested in the market and in the fixed income market. And so this move in yields and what the Fed is doing, and particularly with how high profile the Fed has become, speakers every other day, Jay Powell, kind of a minor celebrity. So yeah, it's what we're thinking about and what we're talking about a lot of the time. And yeah, the bourbon helps, especially on a Friday afternoon.
Yeah. So I've had some great trips to Louisville, by the way, Carol.
Have you?
Oh, yeah. Did the Derby a couple times. The Cyclocross World Championships were there one year.
Tim Stenevec.
I had a really good friend who lived there for a few years, and I used to go hang out with him. It's a cool place. We should do a remote there.
We need
All
to
right,
work on
Ross,
that.
I'm sorry. I'm getting off topic. I'm
To-do
just
list.
having
list.
memory lane.
You guys are
going down
welcome
memory
anytime.
lane here. Thank you. It is a great city, though. Talk to me a little bit about where you think this new era of higher rates will take us, especially with regard to equities, because the truth is we're in a place where we haven't seen rates this high since in many people's careers, to be honest.
Yeah, so I think there's two things to break down. So the first thing is the rapid move and kind of aggressive, over the last couple of months. That's obviously tough for the market to digest. Moving at the long end, especially up that much in such a short amount of time is tough to digest, especially as you mentioned, when a lot of the index constituents have not existed in a world of higher rates. But I do want to be careful of overreacting and acting like a world of 5% interest rates is just a world where equities can't work. We don't have to look that far back. The 80s and 90s were one of the great bull runs of all time. And, 10-year yields were higher than this. The Fed was aggressive through a lot of that period. So it's not that the world of stocks can't work, but you do want to be a little bit more selective. I think, moving up in quality in a world like this makes all the sense in the world. And then it just takes time to kind of digest the move. So higher for longer, is not a headwind in and of itself, but a move like the one we've seen takes some time to digest, I think, is what we're going through right now.
Well, I think it's very telling when you go to your guys' website and the first page, one of the things that comes up is a segment on protecting and growing your cash. Says a lot about kind of the environment we're in. How much of you guys are wealth management? I'm assuming your individuals or the folks that you are working with generally are of a certain income strata. Having said that, what is top of mind for them? I'm assuming it's wealth preservation. And does that mean increasingly putting it in cash? Or are they saying, I'm long-term, I'm going to ride this out?
It's a little bit of both. I mean, we're definitely talking to folks about the long-term plan, things like the war in the Middle East, investing through geopolitical events, having that long-term lens. But I would definitely be lying if I said that one of the primary questions and one of the primary talking points isn't, wow, we can finally get something on our cash. Savers are finally being rewarded after 15 years of 0% interest rate policy and negative rates abroad. So people do really, really like their cash, their short-term treasuries right now. We're even talking to folks about just moving out the yield curve a little bit. I mean, now that the yields on the long end are competitive with the short end, and you could possibly get the capital appreciation bump, if yields were to fall in kind of a downturn or a mild recession next year. So we're talking through all of that, but you're absolutely right. The wealth preservation and just the general excitement about being able to earn something on your money is something that, I haven't really seen in my career, and something that I know a lot of our clients, haven't gotten used to in a long time. So it's good to kind of barbell the wealth preservation and the yield you can get on cash with the long-term stock investment.
Well, does it change the way you're thinking about portfolio construction significantly?
It does and it doesn't. I mean, we're advocates for diversification, and we were before and after this big move in rates. I think now, we're in a bond bear market, but you can now go to a client, go to a presentation and say, look at this, 5-6% yield on a high quality fixed income. So it does change the conversation a bit, and it allows people who are in the drawdown stage of their retirement, or in a more of a wealth preservation stage, to not feel like they have to be overexposed to equities and that volatility because it's the only asset class in town. TINA, there is no alternative, was the story for a decade. And for people who were in that, kind of preservation and drawdown stage, it was really hard to find yield. There were a lot of times we would look at portfolios and see, high yielding things like MLPs or products that weren't necessarily protective of cash, but there was that urge to have some yield because they were living off that yield, or there was an income component that they needed. Now we can have conversations that are much easier because there's treasuries, high quality bonds in the corporate market that are yielding 5, 6, 7%. And, inflation has come down. So that's a real yield that we haven't seen in a long time. So it hasn't necessarily changed how we're building portfolios, but it's made the conversation a lot easier, a lot different. And also, not forcing folks who are in wealth preservation far out on the risk spectrum where they don't really want to be.
You sound pretty calm. So nothing in this market is freaking you out?
Bourbon.
No, seriously. No, but seriously, you sound pretty calm and complacent. I mean, nothing's freaking you out in this market?
Again, it's just what we talk to our clients about. It's just taking the long-term view. I mean, in the wealth management space, most of the people that we work with, even who are, near the end of their working career or in retirement, still have a long-term time horizon. So when we talk about things like geopolitical events, most of these people have invested through wars in the Middle East, through things like 9/11, even a lot of our clients back to the 1970s. And they know, and we talk about, while it was painful and while there are years of big drawdowns like we saw last year, ultimately, the stock market made a new all-time high last year of all time. So we can focus on the long term with our clients.
All right, 20 seconds. What is your favorite bourbon drink? Let's just go there.
It's bourbon on the rocks.
It's an easy one.
Do you have a favorite one?
I don't. I mean, I
like a
brown
whiskey
liquor
sour.
doesn't really agree with me.
Oh.
I get bad headaches when I drink this stuff. But, I make an exception for going to Louisville.
Okay.
Come on down anytime.
We'll put that on the list. Hey, guys. Ross, be well.
What
Have a
about
good
you,
weekend.
Carol?
I told you, whiskey sour.
Okay.
Right, bourbon?
Yeah, that works.
Ross Mayfield, his investment strategy analyst at Private Wealth Management, on Zoom from Louisville. Speaking of alcoholic... Louisville.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. Shares of American Express, they are down 5% now. And Bloomberg's Tom Busby is here to tell us why.
Amex saw volumes on its cards flow faster than expected in the third quarter, with small businesses and corporations pulling back on their spending on the firm's cards. It's also worth noting, though, that in spite of the slowdown in volume growth, revenue and profits at Amex soared to record levels in the quarter as the company continued to attract new cardholders who are willing to pay an annual fee for its premium products. Tom Busby, Bloomberg Radio.
All right, thank you, Tom. Meantime, we're waiting to hear from UAW President Shawn Fain. He'll be speaking shortly, we think, about the auto workers' strike. Vice President of the UAW, meantime, telling us here at Bloomberg that in talks with General Motors, quote, all the pieces are now there. They say they just have to glue it together. The UAW walkout against GM, Ford, Stellantis started mid-September. It's focused on things like higher paid job protections and rising automation and, of course, the reinstatement of pensions. Meantime, we are also hearing now that Stellantis is raising its wage increase offer to 23%. That matches General Motors and Ford, according to the sources. But we're also hearing that the UAW is now asking for a 25% increase, apparently. And as I mentioned, we are expecting a live stream address soon from United Auto Workers President Shawn Fain. That is expected at 4 p.m. We're tracking it all for you here on Bloomberg Radio. Those are the company stories we're following. I'm Denise Pellegrini.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Yep, not a Pride Friday, everybody. Sorry about that.
Hey, that makes our
Take a
job
breath.
more interesting, Carol.
Few
I like
yoga
it.
breaths.
Fridays are good.
Calm meditation app just for
Have a glass of wine maybe in a little bit.
yeah, some scotch, some bourbon.
Bourbon.
Having said that, Punch Bowl, it seems to be saying that Kevin McCarthy is endorsing Tom Emmer for speaker.
You know what? They got a whole weekend to figure it out, Carol.
Yeah.
They're going to take a recess, fly home, spend some time with the families.
Yeah.
And come back to Washington, D.C. and
Did you ever, like, you know,
not elect another
in this
speaker.
industry, you haven't finished a script, and you know,
I just leave for the weekend.
deadline
Go
was like 3 o'clock, and
go
you're
on
like,
vacation.
you're not going home. You got to finish it.
I know. But
Just
it's not,
saying.
we're not elected officials, so we don't have that luxury.
Yeah, I guess so. I don't know. Not like there's anything important to like take care of.
Can we talk a little bit about this story
Budget
about Florida?
shutdown. Yeah, let's do it.
Okay. Florida Beach Paradise needs millions to keep toilets flushing. We're talking about the accelerating growth of Cape Coral, Florida. Cape Coral, Florida.
Cape Coral?
Spurring the town to tap the municipal bond market for basic needs like running water and working toilets.
Wow, they're planning to sell about $138 million in debt next week. Proceeds will be used for water systems to reduce reliance on wells and site-specific septic tanks. Cape Coral joins other Florida cities building and expanding water and sewer facilities to meet demand from a U.S. migration that's given the state the fastest-growing population in recent years. Infrastructure, anybody?
Yeah, that's a good point. Infrastructure. Cape Coral, whose number of residents ballooned almost 40% to more than 200,000 in the last decade, intends to install water mains and improve its sewage system in the developing north part of town. The infrastructure is needed to move from a dependent septic tanks that will threaten to pollute the aquifer as more residents arrive. That's according to city officials and bond filings.
Yeah, kind of interesting, right? Miami-Dade County, for example, has spent $1 billion on water and sewer lines, with another $1 billion proposed for an incinerator and power plant. City of Miami, where Citadel founder Ken Griffin moved his firm's headquarters from Chicago, that happened last year, faces the risk of running out of landfill space and overwhelming its sewer systems because of population increases. I am just waiting for that breaking point, that it's just too many people, especially in kind of very densely packed in certain areas, and how the systems break.
You got to have toilets that work, or else it gets ugly, okay?
There's a headline, everybody. Got to have toilets that work.
Or else things get pretty ugly pretty quickly.
According to sources, or according to Tim Stenevec, my partner in crime here. All right, don't go anywhere. We're going to count you down to the close on this Friday and the week. Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlet Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Carol Massar and Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms here on a Friday afternoon with more than 80% of the S&P 500 in the red. Carol Massar and broader markets right now hitting session lows.
Yeah, absolutely. Going into a Friday, risk-off trade in a big way. I don't know if you guys have been watching some of the solar companies too. SolarEdge reporting that really took a hit today. And if I look at the Invesco Solar ETF, it's down about 6.5% today. It's down about 12% in the past 3 days. So this sector has definitely been under a lot of pressure as of late, Tim.
Yeah, concern about higher rates impacting potential solar buyers, and they have to pay more, Scarlett, for installing those solar panels. And inventories are piling up because people just aren't doing it.
Although you could make an argument that maybe renewable energy looks a little bit more attractive if oil prices do stay higher longer term. Of course, that's a big question mark, given that I would have thought with the Middle East tensions, oil prices would be higher. They did get to 90, but now they've backed off.
Yeah, and we should look at wire to wire, though. We talk about the volatility that we saw in the energy space this week. That shows you the jitters. Similar story when we talk about what we saw in the Treasury space. And, of course, here on this day, the VIX, while it is lower on the day, we should point out it's at 21 and change right now, which may not seem high, but relative to the last year or so, where most people thought it should be a lot higher, that is elevated, to be sure.
We've got this trade, right? We're going into a weekend, and I feel like there's just so many questions out there, certainly the Middle East and the geopolitical tensions, worried about a speaker. I mean, there's just this worry list, Romaine, that just, I think, maybe is scaring investors at this point.
If you want a bright spot, Carol Massar, Dow Transport's in the green. A big part of that is because of a big jump that you're seeing in some of the trucking companies and railroad companies on the back of those earnings that we got out of CSX and Knight Swift. All right, let's go through the numbers here on this Friday afternoon. All the major indices save the Dow Transports in the red on the day. The Dow Jones Industrial Average lower by about 0.9% here on the day, and that's going to be good for about a 1.6% decline on a weekly basis. The S&P down more than 1% on the day, down more than 2% on the week, while the NASDAQ is going to close out the day down about 1.5% on the day and 3% on the week. The Russell 2000 not left out of the action, also sliding here by more than 1% on the day and more than 2% here on a weekly basis. And just real quick, Carol, I just should point out here, the S&P 500 did indeed close below that 200-day moving average for the first time since March.
Yeah, the technicians definitely noticing that. Do want to mention a headline crossing the U.S. fiscal year budget gap widening 23% to $1.7 trillion. That on revenue drop, right? We think about the money coming in or not coming in and what that does, Scarlett, to the budget gap. What I will say, though, S&P 500, Scarlett, more than 432 names to the downside today, 69 to the upside, 2 unchanged. So risk off in a big way.
Risk off in a big way, and that's reflected in the 24 industry groups in the S&P. I was monitoring this all day, and for a while you had at least 3 or 4 groups in the green. That has now shrunk to just 2. Telecoms and food, beverage, and tobacco, so your classic defensive sectors, and they're barely higher, right? Gains of at least 0.25%, 1/10 of 1% for food, beverage, and tobacco. On the flip side, autos, that's Tesla, banks, and of course that's Regions Financial, and software and services all down at least 1.8% on the day.
All right, so let me get to some of the gainers. It was kind of a tough task today, and it's kind of random, if you will. First off, I'm going to start with AT&T. At its highs today was up about 4%, finishing the day with about an 0.8% gain. Scotiabank upgrading the company to sector outperform from sector perform. That seems sector outperform from sector perform. Those are like minor tweaks, I got to say. Citing its free cash flow.
Still green is green, Carol. Green is green on a daily today.
I just always am amazed with these ratings. Anyway, this is the analyst citing its free cash flow following Thursday's quarterly results. The stock's up about 8%, maybe a little bit less than that in the last couple of days, but it's been on a tear since the company reported yesterday, and that third quarter free cash flow was a big beat, $5.2 billion versus an estimate of $4.6 billion, so definitely impressing the street. Jazz Pharmaceuticals, it's a specialty pharma company. It's about an $8.5 billion market cap, rallying in today's session. Bloomberg reporting the company is exploring some strategic options, including a possible sale. This is from those in the know. That stock up 4% at its highs, finished the day, though, still with a gain of more than 1% in today's session. And then Bowl, for those of you who like to bowl, Romaine, you like to bowl?
Bolero, yeah.
Bolero, up 2.6%, was up more than 10.5%, around 10.5% at its highs today. It's
timeless, Carol Massar.
Who doesn't like to bowl?
It's the bowling shirts you like, right? Who doesn't like a bowling shirt? Anyway.
Have you ever bowled, Carol?
You know, what do you think? Of course I'm bold. Everybody's bold.
Okay, I didn't know.
All right, well, the owner and operator
You seem
of
kind of, fancy. So.
bowling centers agreeing to a $433 million sale leaseback with Vici Properties for 38 bowling centers. So anyway, got investors' attention. This stock, though, is down about 16% year to date. 69% of the float is shorted, though.
All right, well, no shortage.
Bowl. I even wear bowling shoes.
We'll do group bowling. How's that? It should be fun. I want to take a look at some of the stocks that moved lower today. No shortage of those. Starting with SolarEdge Technologies, falling by 27.27%. Shares plunged as much as 36.5% today after the company warned that third quarter revenue will be well below its guidance. It cited, quote, substantial cancellations and delayed orders. Talked about this a few minutes ago. Those higher rates are affecting the willingness of consumers to actually pay for solar to be installed. We saw other solar stocks take a hit. Enphase Energy, rooftop solar installers like Sunrun, SunPower, Sunnova Energy also taking a hit today. Regions Financial, it turns out the challenges to regional banks are not completely behind them. Shares falling today by more than 12%. It did slump as much as 16% earlier in the session after warning that it expects further declines in net interest income due to higher rates. You start to see a pattern here, guys, continuing to take a toll on the bank. We should note that the results for the most recent quarter included a one-time charge of $53 million tied to check fraud. This is on top of an $82 million operational loss linked to a different fraudulent check scheme last quarter. And finally, shares of Okta falling late in the session as much as 14%, though closing at 11.6% lower this afternoon. This after the security research news site Krebs on Security said that hackers stole access tokens from the company. A few minutes later, Okta did confirm in a blog post on its website that, quote, our adversarial activity had occurred and said threat actor managed to view files uploaded by certain Okta customers who were recently involved in support cases.
Interesting. A little bit of a relief from the Treasury sell-off here on this Friday afternoon, with yields across the curve shifting lower here as at the close here, 8 basis points lower on the 10-year yield for the day. But we should point out on a weekly basis, those yields are up about 29 to 30 basis points from where they were last Friday here. So the biggest weekly gain that we've seen on a percentage point basis for the 10-year, at least going back to April of last year, of 2022. Just to be clear, yeah, and this is big. And remember, we were flirting with 5% earlier here. And this idea that, again, is not just about whether yields are going up or yields are going down, but it's about the movement. It's about that volatility that is really spooking a lot of people, not just, of course, in the bond market, as you know, Carol, but of course that feeds over into equity investors and their sentiment as well.
Yeah. You know, I saw something that Cameron Kreis wrote in our MLive blog, which was really interesting, which is one way that people buy treasuries, of course, retail investors in particular, is through TLT, the ETF that tracks longer dated treasuries. And shares outstanding, which is a proxy for demand, has climbed more than 300% since early 2022. The ETF performance in that same period, just on a price basis, has fallen about 40% in the same period. So even though the price has gone down, the demand has gone up.
I will say just to that, we were having this conversation off air yesterday, but this idea too of also pay attention to the total return funds, which actually are doing better than the price funds. So it'll be interesting to see whether investors, obviously sophisticated investors know that, but the retail horde, whether they can figure that out on their own.
All right, so Fed commentary, does it go black tomorrow or go?
After Saturday.
After Saturday.
That's it, Carol. No more.
No more. All right, so that calms down a little bit, and we get a ton of earnings next week. So I am curious, when you've got the likes of Microsoft, Alphabet, Meta, Amazon, Visa, Coca-Cola, UPS, Chipotle, like, we're going to get a really big picture of how corporate America is doing, wages, cost pressures, outlook. It's going to be a big week in terms of earnings.
I mean, I think, go ahead.
No, I was going to say, what's the key word that you're listening for?
Efficiency.
Not AI anymore.
Efficiency. I think the key word truly is efficiency. I mean, talking about how these companies are controlling costs, talking about how they're pulling back spending. I'm going to be listening for what types of investments are they going to be making? Are they pulling back on some of those investments?
I do think it's interesting that when you look at some of the earnings that we've gotten so far, some of the things that have been an upside catalyst has been commentary about CapEx and certain types of spending. And I know it's only a couple of companies that we've gotten that have really had a chance to discuss that, but we're going to hear a lot more about that, or at least we're going to want to hear a lot more about that from a lot of the companies that are reporting next week. So it'll be interesting. That's what I'll be looking for to see longer term, whether there is sort of a tailwind of CapEx coming.
Yeah, and especially what kind of forecast they're willing to make. It's a stretch to even say anything going into next year, right? So how much are consumers actually really willing to extend themselves at this point? It's a big question mark.
Do you know what the best performing stock is in the S&P 500 this week?
Wasn't it like a trucking company or something?
VF Corp.
Oh, VF Corp. Yeah, you're right.
Yeah, and then you got SolarEdge at the bottom of the pack.
Yeah.
Get your rest, everybody. It's going to be a busy week next week.
Are you working a full week next week?
What do you think?
I think I am.
What do I think?
Yeah, I think I am. Check my calendar.
out
but
here, Scarlett.
Yeah.
Tim's here on a Friday. What happened?
First one in a long time.
That's the one who's here. All right. Looking forward to that bowling party. All right. That's a wrap, guys. Have a good and
Are we
safe.
committed to that?
Yes, with the shoes and the shirts.
Definitely.
We got viewers and listeners who are going to commit us to it. All right. That's
They're
a wrap.
invited too.
Thank you.
Yeah.
Looking forward to it and beating your pants off. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. Folks, we will see you on Monday.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovec in our Bloomberg Interactive Broker Studio on YouTube and, of course, on Bloomberg Originals.
Yeah, we're getting to some continuing our coverage from the Middle East. We noted earlier in the program, Carol, that the U.S. now saying 2 U.S. citizens held in Gaza have been released. Israeli media reported earlier that they were handed over to the Red Cross. We also have leaders from around the region heading to Cairo for a Saturday summit on the crisis. We've got China and Germany also sending envoys to the meeting. Carol, Israel's military said it struck Hamas targets in Gaza overnight, and Israel also responded to fire from Lebanon by hitting Hezbollah assets.
So let's get to Mick Mulroy. He is back with us, former Deputy Assistant Secretary of Defense, a retired CIA officer, understands this. We've been leaning on him big time. He's also co-founder of the Lobo Institute, so obviously looking at areas of the world where there is conflict. Mick, we want to get you to weigh in. We know you're monitoring a lot of stuff right now. Another crazy week, if you will. How are you thinking about it on this Friday?
So first of all, great to be with you, and it's great that these 2 American hostages were released, a mother and daughter. They're staying because of humanitarian reasons. She was very sick. But it's always good to get Americans released, but there's several more, and there's around 200 total hostages held by Hamas right now, which of course is a war crime to hold civilians as prisoners of war. So that is a very good thing, and hats off to everybody that had a role in that, Qatar, for example, and likely the FBI and the CIA. So good for them. But there's a lot more to do when it comes to getting hostages out, and it does look like we are on the edge of this ground invasion that could be coming with the next 24 or 48 hours.
We want to also bring in our Bobby Go. She's a Bloomberg opinion columnist, but has covered the Middle East for a long, long time. And, you know, I know, Mick, you've got to run, but Bobby, I wonder if you have a question for Mick, who's also been covering this. We'd love to do that, Mick, before maybe you have to run. Bobby, you have a question, real quick one?
Well, yes, absolutely. What I would like to ask Mick is basically the events of the last 24 hours, these missiles and rockets that have been directed at American targets as well as Israel from not just Hamas, but also, and not Hezbollah, but also from Shiite militias in Iraq, and it looks like the Houthi militias in Yemen. What they all have in common is that they're all sponsored by, paid for, trained by Iran, and how much of sort of Iran is looming over the backdrop of all the decision making that's taking place in Washington over what to do next in the region.
That is a very good question and a very astute one. You are correct. Hamas gets about 90% of its military funding from Iran. Hezbollah, very similar support. Multiple militias in Syria, and the Houthis or Ansar Allah in Yemen, who has been waging a bloody civil war, as I'm sure you're aware of, since around 2014. They all have Iran in common. They are, especially when it comes to their advanced weapon systems, they get almost all of them from Iran. And it's likely that Iran could use that connection should Israel, and it looks like they will, launch a ground invasion into Gaza, particularly if Hamas looks like it's going to be destroyed. There'll be a lot of pressure on all of those entities you mentioned, and Iran could think. And I think that's why the United States, and that's why they said they place so much military capacity right off the coast of Israel with 2 carrier strike groups, a Marine Expeditionary Unit, and more elements moving into the area.
Hey, Mick, I know you got to go. We are hearing from Antony Blinken, Secretary of State, right now after the release of 2 American hostages, and that's where I want to go with our last question to you. Just give us an idea of what happens behind the scenes to secure the release of hostages, even though there are so many more that need to be released.
So I think this is such a difficult military problem. Even the best units would have a hard time rescuing 200 hostages, likely in tunnels, likely it's already wired to explode if they get too close and might actually facilitate the recovery. So all these diplomatic efforts are truly their best option for getting out. And I hope that they continue and we see more hostages coming out.
Hey, Mick, thank you so much. You've been great throughout this crisis, and we know you've got to run. But that, of course, is Mick Mulroy, as we said, former Deputy Assistant Secretary of Defense, retired CIA officer, retired U.S. Marine reservist, and co-founder of the Lobo Institute, which advises, consults, and teaches on conflict. So appreciate he weighing in. And I've got to say, we've also been leaning big time on our own Bobby Ghosh, Bloomberg opinion columnist, covering culture, but he spent many, many, many years covering foreign affairs, particularly from those conflict zones in the Middle East. So, Bobby, we do want to stay with you. I do think about what has to be front and center for the United States right now in terms of in a fluid situation and trying to calm things down. But it does feel like with these additional conflicts or outbreaks, if you will, that it does feel like there's slowly a little bit of a creep.
There's always a risk of that when the United States commits itself to a situation. Even if the commitment is for peace, there's always a risk of getting caught up in a war-like situation. So yesterday, the reporting from our news colleagues of these missile attacks from Yemen, which is a really long way from Israel, but these missiles, it would appear, were heading in the general direction of Israel. They would have to fly over quite a lot of Saudi land mass as well, and they were taken down by an American warship. That sort of, now nobody, no human being was hurt in the process, but it is an American ship taking aim at a missile that is heading in the direction of Israel. So the United States, to that extent, is already engaged in the war.
What does that, Bobby? What does that mean, though, when the U.S. is engaged in that sense? And I asked the same question to our own Nick Wadhams earlier, because does it risk, in your opinion, the U.S. being drawn into this conflict more so than it already has been?
Yes, it does. But the crucial thing is that it took place a long way from the main theater of the war, and that it did not involve American boots on the ground, certainly, and it did not sort of involve shooting down a plane, for instance, or a nest of fighters. No blood was spilled. So that gives the U.S. a certain amount of distance. But it is a cautionary tale. It tells you that the longer this conflict rages, the more we might find ourselves in situations like this. And the fact that the U.S., that President Biden has sent 2 aircraft carrier groups into the Eastern Mediterranean.
Right.
They're not there just for show. They're there to warn off Israel's other enemies and our enemies from trying to get involved. And if they do get involved, then a moment comes when the United States is forced to follow through on its threats. We should all hope that moment never comes. The big part of President Biden's visits to Israel was to try and make sure that there was a humanitarian corridor into Gaza.
Right.
And I think he was encouraging the Israelis to hold back, not to sort of rush in with a sense of vengeance, but to be more measured, to make more efforts to sort of prevent hurting civilians, and to have a plan for what happens after the fighting is over.
Do you think it was smart of the president to tie aid to Israel and to Ukraine and to concerns about Taiwan and also, the Mexican border, like to tie it all together about the protection of American democracy? And again, I do this to you all the time. I've got about 30 seconds here.
Well, it's the nature of our politics now, unfortunately. In an ideal world, he would be able to do all those things separately, and you would have a responsive Congress that would appreciate what's going on in the wider world. You and I know that that's not what the Congress is like right now. And to get people's attention, to get the attention of the folks on Capitol Hill, the president's having to sort of bundle all these things together. There is a common narrative, and he hit those notes yesterday in his speech.
Right.
But in an ideal world, he wouldn't have had to.
We're smarter because of you weighing in on all of this. Bobby Ghosh, Bloomberg opinion columnist, as we said, has covered foreign affairs for a long time. He currently covers culture, but just knows so much about what's going on in that region. All right, Carol Massar, Tim Stanovic, don't go anywhere. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. We check the markets for you all day long at Bloomberg. Lower finish to the week and a wall of worry. And just what we need going into the weekend. A Federal Reserve report just out flagging concerns about the risk of inflation, the potential for large losses in the U.S. office market, and funding pressures on some banks. Also, this report repeated what Fed Chair Jay Powell said yesterday, that the Fed is looking at worsening geopolitical tensions, and that could hurt global markets. Shares of Regions Financial, they plunged more than 13%, speaking of banks, after weaker than expected quarterly results. And Chris Grisanti, Chief Equity Strategist over at MAI Capital, says just not a great place in the banking cycle right now. Could see more bank failures.
It's as good as it can get in terms of credit. Interest income will be improving if short rates start to go down, the Fed eases, but that's only because the economy will be slowing and you don't really want to own banks then. So, just don't love them. And I'm actually expecting another shoe to drop a la, Silicon Valley or something, simply because with such high rates, usually something breaks.
You heard it here. Something could break in the banking industry. Grisanti there on the Bloomberg Surveillance podcast. The Dow right now breaking just a little bit down, 0.8%, 286 points. The S&P 500 down 1.3%, down 54. The Nasdaq down 1.5%, 202 points. Yield on the 10-year 4.91%. Spot gold higher today, better by about 0.3%, 19.79 an ounce. Crude oil lower, down by 0.7%, 88.75 a barrel. All this pressure, guys, just makes me kind of think maybe we need to take a trip on a yacht or something like that.
Yeah, sign me up.
No, I know someone who can help us make that happen.
Nice transition. Denise, thank you so much. Denise Pellegrini in there for Charlie Pellet. Well, Fed Chair Jay Powell, in his conversation at the Economic Club of New York this week with Bloomberg's David Westing, saying we have a very resilient economy on our hands, and yet he, like others, making a point about the wide path of where we might go from here. And that brings up so many different questions, Tim.
Yeah, we look to all kinds of indicators, including what's going on when it comes to the luxury space. We heard from American Express a little earlier, a good barometer of what happens for small business. This also brings us to Fort Lauderdale, the International Boat Show, where it's getting underway next week. And we got a great guest on this.
We do. Chuck Cashman is Chief Revenue Officer, Executive VP at the boat and yacht retailer MarineMax, on Zoom from Tampa, Florida. Hey, Chuck, nice to be talking with you once again. How are you? And tell us about kind of the environment right now when it comes to yacht sales, boat sales.
Well, hello, thank you, first of all. And yeah, the environment is probably like what you see in the rest of the world. There's pockets of greatness, and then there's areas where it seems to be a little more challenging. There's some resilience out there. There's some caution out there. But really, at the end of the day, it's still pretty good.
Tell us some numbers here that give us an idea of how good it is.
Well, let's take the Fort Lauderdale Boat Show that we're heading into is a pretty good industry bellwether for us, and is the show to capacity. And there'll be approximately 1,300 boats displayed over those 5 days. And that show has the economic impact of similar locally to a Super Bowl. So, I mean, it'll be a well-attended event. We've got a lot of RSVPs. At Fraser, we've got 14 yachts. We've got a mansion that we have our clients come to, and we take them to the show by a tender, and the guest list is full. And these are people with incredible net worth, good wherewithal. They're a great indicator, and you take that enthusiasm, and that's, to me, that's step one of the indicator, right? Without the enthusiasm, you're never going to get to transactions. So the first step is well in place.
I mean, these things have become an event. I think about, Tim, when we go to the U.S. Open out in Queens, like, that is quite an event. It's a social event. Yep, it's first and foremost about the tennis, but it's about food and so many other things.
It's a very high-end event, too.
Very high-end. And I feel like the same thing, if you will, Chuck, this kind of event, right? You've got boats in the water, you've got probably high-end cars there as well. Like, it becomes a bit of an event. But it doesn't necessarily, or does it, speak to a certain, group of buyers, if you will?
Well, it does. So, you know, we look at our average sale, and you know, we hate to give out too much after the show, but you know, we'll do well over 100 deals, and the average sale will be well over $1 million. So, I mean, when you start thinking about that many transactions in a 5-day span, it's that really is rarefied air. It's not. It's similar to U.S. Open. I'm a tennis fan. I mean, I think it's one of the greatest events in the world. For boating and yachting, this is the U.S. Open. This is the Masters, whatever you'd like to compare it to. This is the best of the best, all coming together on the industry side to present to the best of the best on the buyer side.
Hey, Chuck, I'm surprised to hear the $1 million figure. It seems kind of low for luxury yachts. Given any
well, when you blend it over. Well, yeah, so I'm sorry. When I talk about Marine Max, right, in that 100 units, when you talk about luxury yachts, I think the bell of the ball, so to speak, is approaching 200 million.
Yeah, there we go. Okay,
So, yeah,
that's more like it.
No. Yeah, sorry.
I mean, you know, $1 million, it's like you get a yacht, you get a yacht, you get a yacht.
Everybody get a yacht.
Okay.
No, for the 14 yachts that Fraser represents, the average is probably closer to 10 million.
Okay.
In that $8.5 to $10 million, and but you know, when you get to that, it's fewer transactions, and I wouldn't want to give the appearance that, hey, unless you have $10 million, don't go to the show. There's a lot to do there. There really is.
Well, and that's, you know, it's interesting too. I always love kind of typical. I always ask you this probably. Who is your typical buyer? And is it all cash? I mean, higher rates, I'm just curious, are they tapping into a higher rate market? And is there any impact of that on this type of market?
You know, as crazy as it sounds, I would say there is zero impact. And it's probably why the Fed's having such a hard time figuring all this out. Zero impact from the rates. I've talked to some very wealthy, very smart people that have told me, they gave the analogy of, well, you know, if you go back 2 years when it was, you could get money for 3% to buy a boat. They weren't making any money in terms of bonds or CDs or any of that stuff, the secure instruments that they use for their money. Now they're making 5 or 6% easy, even though the rates are 8%. It's the same delta. So they're financing more today than they did 2 years ago.
What? But are they actually? I mean, I'm not financing yachts. People just come out and pay for these things, right?
They can, but some of our wealthier clients really like to keep their cash. And you know, and we have both. Don't get me wrong. We'll have many clients that come in thinking they're going to pay cash. You know, we have a division of our company that really honestly tries to convert them into financing. We present a way that this makes sense, and more often than not, they do. They'll finance some of it or all of it. And it's not because they have to, it's because it's just a smarter business decision given the climate out there right now.
We definitely saw coming out of the pandemic, I feel like folks picking up a lot of new boats in this market, certainly on an uptick. I'm curious in terms of sales, what's the smart comparison? Is it 2019? Is it, you know, how is it doing it since the pandemic? Give me an idea of what the trend lines have been like.
Well, yeah, you're right on the money. It's 2019 is the one that everybody is using, and there are a lot of similarities to 2019 for sure. But I think if you go back in history, you can sometimes you can find what you're looking for if you look hard enough. The difference is there are so many new entrants over the last couple of years into boating that there's a bigger, in my opinion, there's a bigger pent-up demand that's waiting to happen. Not everybody over the last couple of years bought the right boat. It was, I would use the word frenzy. People that couldn't travel, they couldn't go anywhere. They realized that boating was just the most amazing place to take your family and still be isolated. So they took, in some cases, they bought a boat not knowing what they were going to get into. So we're getting a faster trade cycle now that they know what it is. Maybe they bought too small, they bought too big, they didn't get the right boat. So we're getting a few more at bats, so to speak, with people that didn't get the right boat, and that underlays the foundation of the normal demand that you get. So it's a little bit more brisk than 2019 in terms of enthusiasm and prospects. Now the sales right now are kind of right in that same area, but as we start to get a little more inventory, I think the sales will come along with it. We're still in a little bit of a supply chain issue, not much, but a little bit.
What's the trend that you're seeing with types of amenities, features? Like what's 2023 in terms of what yachters want this year?
You know, alternative propulsion and big yachts and the super yachts. Alternative propulsion is
is that electric?
Is probably
What's
the
alternative
buzzword.
Propulsion?
Diesel, electric in some cases, hydrogen, solar. You know, the whole industry is trying to get more green, which I love, and I think most of the people in the industry love. I think the appetite for it is going faster than the ability to deliver the technology. But I heard a statistic where somewhere half of the super yachts being built right now have some sort of alternative propulsion, meaning electric motors powered by diesel generators instead of diesel engines. And what that means, if you're not in that world every day, is you're burning far less fuel to power the boat and go the same distance and the same speed, but much less impact on the environment.
Right, not spewing stuff into
which is a really good thing, right? We're all excited about that.
Number one buyer, just 15 seconds, still the Americans?
Absolutely, absolutely. America is still very strong, and you know it's a lot of areas pop up all over the world, but America remains strong.
All right, interesting stuff. Fun to check in with you. Good luck at the show. Chuck Cashman, Chief Revenue Officer, Executive VP at MarineMax, joining us on Zoom from Tampa, Florida.
Let's now get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The Biden administration is confirming Hamas has released 2 U.S. hostages, a mother and a daughter from Chicago. They've been identified as Judith and Natalie Ra'anan. Secretary of State Antony Blinken making the announcement.
Over the coming hours, they'll receive any support and assistance they need. And of course, we're very anxious to be able to reunite them with their loved ones. We welcome their release. We share in the relief that their families, friends, and loved ones are feeling.
Well, Martin Fletcher is one of those loved ones.
Judith and Natalie, they're from Evanston, Illinois. They are my cousin's son's wife's family. So it's not a very close relationship, but it's we're a tight-knit family like many families.
Fletcher says they're breathing a sigh of relief, but there are still as many as 200 hostages still being held. The Biden administration has asked Israel to hold off on a ground invasion so that mediation talks regarding those hostages can continue. Congressman Jim Jordan is no longer the Republican nominee for Speaker. A vote was taken behind closed doors after Jordan earlier today lost Jordan lost that secret caucus vote, 112 to 86, and he spoke with reporters shortly after that.
We need to come together and figure out who our speaker is going to be. I'm going to work as hard as I can to help that individual.
Republicans will now hold another candidate forum on Monday. House Minority Whip Catherine Clark says the impasse over who will be Speaker has gone on long enough.
Come together. You are weakening our country. You are weakening this institution. You are ignoring the work of the American people. The time is now.
Clark and other Democrats say there are more moderate Republicans Democrats could support. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. We have some headlines coming in from United Auto Workers. President Shawn Fain saying in the live stream streamed on Facebook that the union has gotten new offers in the past 24 hours from 2 of the 3 automakers. He says there have been serious movements from GM and Stellantis to get the strike resolved. And Shawn Fain also confirming all 3 automakers have offered a 23% raise. We're still trying to find out exactly where we stand in terms of the strike. With all this, we're monitoring it for you here on Bloomberg Radio. Stocks, they did fall today. Mideast concerns, wall of worry over rising interest rates, and also the uncertainty on Capitol Hill over House GOP leadership, all weighing on sentiment. Eric Nelson, macro strategist at Wells Fargo, says higher borrowing costs alone are dragging on sentiment.
Focusing back on the fundamentals and sort of what's driving the bond market here is, to what extent is there going to be an impact on growth? Because that's really been the big, I think, factor here driving this sell-off in the bond market. And until that changes, either domestically or globally, it's hard to see a sustained rally here.
And Nelson there on Bloomberg Surveillance. We have these positive headlines, though. UK outlook moved to stable from negative by Moody's, and Greece outlook raised to investment grade by S&P. Stocks, as I mentioned, though, they did finish lower. The Dow down 0.9%, 287 points lower. The NASDAQ down by 1.5%, down by more than 200 points. The S&P 500 down almost 1.3%, down 54 points. The yield on the 10-year, 4.91%. Spot gold, it did finish higher, up about 0.3%, $19.80 an ounce. Crude oil down slightly, down about 0.3%, under $89 a barrel, almost 88, 88.16 a barrel on crude. Shares of American Express, they closed lower, maybe because volumes on its card slowed faster than expected in the third quarter. Those shares down more than 5%. And that is a Bloomberg Business Flash.
All right, Denise, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week, streaming on YouTube and Bloomberg Originals. Remember that strong U.S. retail sales data this week?
Yeah. Turns out American consumers are still spending money.
A lot of different things.
Yeah, American Express's third quarter revenue and profit also soaring to record levels as the company continued to attract new cardholders who are willing to pay an annual fee for its premium products. Still, spending slowed a little bit. It's kind of a mixed report.
It is kind of a mixed report. So we're getting different facets of kind of what's going on with the American consumers and different types of consumers, to be fair. Tom McGee is back with us, president of ICSC. It's the organization formerly known as the International Council of Shopping Centers. It's the trade association of the shopping center industry, as we'd like to remind our viewers and listeners. He is back with us on Zoom in New York City. Tom, how are you?
It's great to be with you, Carol. I'm doing well. Hopefully you are too.
We're trying to keep up with kind of the news flow and just deal with the world, which is pretty heavy, as you would imagine. The shopping center industry, we did get a strong retail report this week. What are you guys hearing front and center from some of your members?
Well, the consumer continues to be resilient. We're heading into the holiday season with an expectation for a positive holiday season, 3.8% growth. 7.6% growth in the food and beverage industry. So the consumer continues to be resilient, certainly concerned about inflation, no doubt about that. You're seeing the consumer, particularly during the holiday, with an expectation to spend more in discount department stores specifically, but still strong. And, until something dramatic happens in the employment market, I would expect the consumer to continue to be resilient. That's the ultimate consumer-facing industry, and consumer confidence drives behavior. And if you have job security, you tend to be more confident in spend.
Where are you seeing spending patterns, and how are you seeing spending patterns, or how are your partners seeing spending patterns right now at these shopping centers, which have really morphed from sort of box stores to really experiential places in a lot of these newer areas?
Yeah, so our industry covers
We went to dinner there right before I met you at the airport on our way back. I was there with a friend. It was an amazing indoor/outdoor experience, and it was like a mall. unlike one I've ever been to. And they've
Isn't that the one that had Italy?
Yeah. Sarah went there as well.
Sarah
who,
Livesey, yeah.
one of our producers. And I got it. I mean, it was crowded. It didn't feel like a typical mall. This type of thing only works in California because the weather is perfect there all the time in Southern California. But they had like outdoor furniture that people were like lounging on and looking on at their phones.
Like just
they had
hanging,
high-end,
right?
They were just hanging out there. I was like, what is this, 1990?
Yeah, it is interesting, if you think about it, Tom, kind of the rethink on what kind of malls have, kind of morphed into.
Sure, I think that's a great example, and different properties have different offerings. Whether it's the American Dream here in the tri-state area.
Great place to teach your kids to ski. Seriously, it really is.
To your point around different weather patterns and different drives different offerings, but malls have evolved, and the story of the demise of the American Mall has been written for the last 30, 40 years.
Okay, but to be fair, the American Dream Mall is struggling pretty badly right now.
Again.
Well, I think every property has its own history, but my real point is that the mall industry, the demise of the industry has been written for decades, and yet we're still at basically the same number of malls in the country today that we had 20 years ago. And so they're very resilient, and good real estate will always find its purpose. And so the evolution is a big part of retail and a big part of real estate. And so the mall sector is one part of the industry, and then you have what your Target anchored, your Walmart anchored, open air type of center, or even grocery anchored centers. And what's happening is in those physical retail locations, those stores are really starting to use that physical space, not just for traditional shopping, but also as really mini fulfillment centers. And so it's an opportunity to, fulfill online orders, to service that last mile. And that really became something that, accelerated quite dramatically during the pandemic era. Obviously, by definition, what was happening, people couldn't congregate in physical space as often. And so retailers were forced to adapt. And that's become very effective. And so the demand for physical space, particularly in that open air sector, is super strong right now. If you look at physical retail space in the United States and where it was at the financial crisis in 2008 and where it is today, while population growth has accelerated, while GDP growth has accelerated, retail sales have almost doubled during that period of time.
Right.
The amount of physical retail space has not, increased almost at all. And so you really have a mismatch of supply and demand now.
Right.
Where there's a lot more demand and not enough supply to fill it.
Do want to point out that we reported, Bloomberg News, back in September, that New Jersey's American Dream Mega Mall losses quadrupling in 2022, widening to $245 million. This is a special situation, it does feel like, but we continue to report on it. Hey, Tom, just got about 30 seconds left here. You guys have a survey out for the upcoming holiday season. Anything that kind of indicates a possible recession or consumer slowdown? And again, just got about 30 seconds, please.
No, we're forecasting positive retail sales, 3.8% growth, 7.6% growth in F&B. 8 out of 10 Americans expect to spend equal or more than they did last year. So right now, the consumer continues to be resilient.
All right, going to leave it on that note. Listen, have a great weekend. Always fun to check in with you. Tom McGee, President and Chief Executive Officer of ICSC. It's a group that's representing the shopping mall industry. So a good check on the consumer, maybe what's
optimistic.
Ahead. Yeah. I don't know. I can't tell.
That mall was cool.
Have you gone back a lot, though?
Oh, I'm talking about the one in LA.
Oh,
that was the first time I was there. Yeah, the American Dream. We'll go back there.
Yeah.
Yeah, we'll do some skiing.
Yeah.
It's a good way to teach your kids to ski.
I have to try that. It's kind of fun. All right, you are listening and watching Bloomberg Business Week. This is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We're keeping a close eye on the situation with the automakers. We had UAW President Sean Fain saying just a few minutes ago, really, the union had received better offers from Detroit's three car makers, but there was still more to be won. Stellantis, General Motors, Ford, all offering 23%.
The Alabama-based bank is warning that it expects further declines in net interest income as higher interest rates continue to take a toll. Regions is reporting net interest income of $1.3 billion for the third quarter, worse than what analysts expected, and a more than 6% decline compared to the last quarter. The quarter's results include a one-time charge of $53 million tied to check fraud after reporting an $82 million operational loss linked to a different fraudulent check scheme. Ann Cates, Bloomberg Radio.
All right, thank you, Ann. And we're also watching shares of American Express. They fell today more than 5% after volumes on its cards.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Carol Messer and Tim Stenivek.
Door's secret ballot says he's ready to support the next person selected as the speaker nominee.
It's important we do unite. Let's figure out who that individual is, get behind him, and get to work for the American people.
Republicans will hold another candidate forum on Monday with a possible floor vote on Tuesday. Another defendant in the Georgia election interference case is pleading guilty. Attorney Kenneth Chesborough entered a last-minute plea today as jurors were even being questioned. Bloomberg News legal reporter David Voriakis has more.
He admitted that he played a key role in a plot to assemble so-called alternate or fake electors. And what they were trying to do was have electors in 7 different states that said that their state had given the victory to Donald Trump when in fact it went to Joe Biden.
Bloomberg's David Voriakis says as part of the plea deal, Chesborough will need to testify truthfully at any related future trial. Well, the judge overseeing Donald Trump's civil fraud trial in New York has fined the former president $5,000 for the violation of his partial gag order in the case. He had dangled the threat of imprisonment earlier in the day, but Trump's attorney said the failure to take down a post that was critical of the judge's law clerk was an oversight. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week on this Friday. Yay.
Yeah, we got another hour to do, but it's still Friday.
Not that anybody's counting.
We got a couple segments, including wine, Carol.
Yeah,
too.
We're going to get to that in just a moment. Having said that, thinking a lot about what could develop over the weekend in terms of the Israel-Hamas conflict. So we're certainly keeping that front and center, watching headlines on this Friday for you. Coming up on our weekend show, which airs on Bloomberg Radio